Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is get everything you need to know in 90 seconds at 9 o'clock, with news downward pressures are starting to build in China. But first, the overnight dairy auction was a very good one, with overall prices up 4.3% in US dollars and up 5.1% in New Zealand currency. There are many positives. The key whole milk powder price rose slightly more than expected, up 2.7%. But the food service products were all stronger than expected, with skim milk powder up 6.6%, butter up 4.7%, and the star of the show was cheddar cheese, up 14%. And in a virtuous influence, all of this came as the Kiwi dollar retreated. Global attention is now returning to the US Fed's policy review tomorrow. The expected unwind of their easy money policies has traders watching for how that will reverberate through financial markets. And Hong Kong retail sales rose 7.3% in September from a year ago, but that's still very disappointing for them, and they remain in a deep funk. The start is still 6.4% lower than September 2019, and an amazing 23% lower than September 2020. In Beijing, a notice on an official website sparked online alarm after it urged local authorities to stabilise food supply and families to stockpile daily necessities. The official explanation said it related to weather and pandemic risks and not war with Taiwan, as some had assumed. Adding to unease is Premier Li's acknowledgement that China's economy faces new downward pressures. China's shrinking steel industry is having the expected ripple impact on iron ore prices, with them falling below $100 a tonne yesterday. They've now fallen 45% since peaking in May this year. Yesterday, the Reserve Bank of Australia signalled it is ending its interest rate targeting via their 3-year government bond. This was part of a shift in focus brought about because it is acknowledging inflation will be higher there than they have assumed. But they still claim it will be milder than for everyone else. The era of easy money and ultra-cheap property debt is ending. However, it is holding its 0.1% policy rate and tolerating inflation in a bid, some say, to drive up wages in Australia. The US Treasury 10-year yield opens today at 1.54% and down 3 basis points overnight. And the price of gold will start today at $1,788 an ounce and down $3 from this time yesterday. And oil prices are 50 US cents lower at just under $83 a barrel in the US, while the international Brent price is now just over $84 a barrel. And the Kiwi dollar opens today sharply lower, down almost a cent to just under 71.1 US cents. Against the Australian dollar, we're marginally firm at 95.6 Australian cents. Against the euro, we're also sharply softer at 61.3 euro cents. That means our trade weighted index starts today well down from this time yesterday at just under 74.7, but still well above the top of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.